G'day everyone, welcome back to Pete's Investing. Today's April 14, 2023. This is the US S&P 500 update. We've got here the daily, the 4-hour and the 1-hour timelines, and I'll drill down to each of these. But overall, you can see here on the hourly, the 4-hour, they're all in an upswing on the CCI 1500 with a moving average 400. Whereas on the daily, it's still in a downtrend, but it's broken up through that moving average. So that's a slight positive in terms of bullishness. We need to see it break above this key resistance area, and I'll drill down to each of these. So again, just drilling out, first of all, we do use the CCI 1500 as opposed to the moving average 200 of the price chart. That because it gives us a better indication of price action and movement and more reliability. In this case, the S&P is a good example of that. For example, back here, the CCI 1500 broke below its moving average 400 back in September 21, whereas the moving average of the price chart kept going up. And you may have made a few more gains in that little area there in those couple of months, but this started telling you that the price was weakening and a decline was coming, and it eventually did. As well, just to be also to consider, here you can see there were a few false breaks above the moving average 200 of the price chart, and more recently there was another false break, false break in terms of, depending on where you're going in terms of overall trend. They were false breaks in terms of the price action overall, whereas the CCI was telling you to continue not to take long positions. Again, you could have taken some long positions in these little rallies if you've got a good trading strategy, but again, just to be mindful, you're trading against the trend, and that's always a danger. But coming back to where we are today, I've got these two support resistance lines, support at 38.31 and resistance at 41.41. And you can see there when I drill in more closely, it's actually gone above this descending trend line. I've drawn this descending trend line, and I'll explain why the reason for that is in a minute. It's broken above the descending trend line and it's hit this resistance area at 41.41. So it's just resting there for the moment, and we'll see where it goes from here. But again, just be mindful, the CCI is broken up through the moving average, but the moving average is still in a downtrend, which is a caution, because again, you can see there's a bit of a false break above the moving average, but the moving average continued to stay in a downward momentum. And the reason for this descending line as well is if the price does collapse from where it is now or retraces back to the downside, it may continue to trace and track against that descending moving average. So I like to keep that there until it's definitely broken to the above or below, and that's no longer valid. So at the moment, it's still a valid resistance or support area. Looking at the 4-hour chart, I've also drawn this ascending line, and that may be a potential. If it breaks to the downside, it may actually continue to rise against that descending trend line as well. So that's all I'm going to say about the 4-hour chart at the moment. On the hour chart, again, you can see more clearly it's still in an uptrend, and what I've done here as well, I've drawn a Fibonacci extension between that low, that high, and that retracement. And if it does break to the upside further, we've got some further expansion Fibonacci extensions shown there, and I'm not going to predict where it may stop because no one knows, but there's the possibilities and probabilities if it goes higher. Now, in terms of trading ideas, if it does continue to go higher, again, I only trade in the direction of the overall trend. So in this case, we're taking long trades only. So drilling down, I've just inserted some fractals here, and so if it breaks higher, you can see there it's ready to, once it breaks above that fractal, it might be a good opportunity to go long. And what I do is just going back to a bit of this history. So you could have gone long in any one of these places where it broke above the fractal, and I don't enter into the position after the first candle. In other words, in this example there, for example, I would have entered a long position at that point, but I would not have entered a long position at any one of those because you may have missed the ride. So you would have gone long at the end of that candle, and from there I would have taken a small percentage gain. I like taking small percentage gains as opposed to holding and to hoping for a very large gain. Anyway, just a small trading idea you may want to consider, and to get more ideas and trading ideas, reference the links in the description below. Support us on Patreon for further knowledge, and also hit the like button. I'll see you in a future video.